Firms can be organized in many different ways, and there are distinct advantages and disadvantages to each one. The simplest and easiest form to initiate is called a proprietorship. A proprietorship is owned by one individual who assumes unlimited liability for the actions of that firm. Really, there is no legal distinction between the business entity and the individual. If the owner dies, the firm ceases to exist. A partnership is a business owned by more than one individual. Partners are generally subject to unlimited liability for the firm's actions, just like a proprietor. However, partnerships are governed by rules contained in a document called the Articles of Partnership. Technically, the partnership ceases to exist when one of the owners dies. It has to be reorganized. But the fact that there are other partners suggests that it's going to continue in operation. There may be different types of partners. Some partners may manage the firm, and therefore their behavior affects the firm more than other partners that might just be capital contributors. These are called limited partners. Limited partners have a limited role in the firm. They don't generally serve as a manager or a laborer in the firm, and they have less participation in the profits of the firm as well. Their liability for the firm's actions, therefore, may also be limited to some degree. The type of organization that we will focus on is called a corporation. Corporations tend to be the ones hiring managers from business schools and so provide employment for professional managers. The ownership and managerial functions in a corporation are separated. A legal document called a corporate charter outlines the relationship of the constituents in a corporation. The pros of a corporation are, currently at least, that the tax rates are fairly low. There's also a corporate legal shield. In other words, the owners of a corporation, the shareholders, have limited liability. They're sheltered from the actions of the corporation. It's easier for corporations to raise funding because there's no limit on the number of stockholders. Stockholders can be individuals or institutions. There are some drawbacks, however. First of all, a full legal setup is required. This is usually a complex document that is costly to put together. Another drawback for a corporation is that the corporate profits are taxed both at the corporate level and at the individual level if the firm pays dividends or if an investor receives capital gains from the sale of their stock. Other forms of business include what we call a hybrid business form. An example of a hybrid business form is an LLC, a limited liability company, where the legal and financial liability is limited, but the company doesn't have to go to the expense and complexity of filing and chartering as a corporation. The rules are generally set by the state in which the corporation's headquarters are located.